This is the Value Investor Podcast with Tracy Reinick. All things value, all the time.
Welcome to this week's podcast. I wanted to get another housekeeping note out of the way before I get into this week's topic, and that is I'm doing new videos for here at Zacks on YouTube. You can check them out. They're called Hidden Gems. And while they're not exactly value stocks, although they might be, they still, I think, would be of interest to value investors because they're stocks that have great fundamentals, but few people are watching them and even fewer analysts are actually following them. So that's where you get the hidden gems type of thing. So check those out. Also over on YouTube or on Zacks.com, of course. And this week in this podcast, I'm going to talk about an area of value investing that I think is where all value investors need to be, and that is in small cap value stocks. Now, why do I think that that's the most important area for value investors? Mainly because small cap stocks are obviously growing more quickly than the large caps. There's a lot of opportunity there because of the growth possibilities, but combining that with our, really strong value fundamentals, that these stocks are cheaper than the overall market and that people are ignoring them. And you get a really powerful combination then. You get the small with the value. And over the last couple of years, the small caps have underperformed the big caps. So to me, they're even cheaper and there's even more opportunities there. And over the longer haul, a lot of the data has shown that the small cap value is actually outperformed everything else, even small cap growth. So small cap value is definitely an area you want to add to your portfolio, especially if you're a value investor, but basically everyone should be in it. Small caps, you can play it a couple different ways. This is the problem with small caps because, they're small. It's hard to find them. It takes a lot of them to add diversity to your portfolio. So I'm going to give you a couple of ways you can play the small cap value stock, game out there. And then you can pick and choose or do a combination of both if you think that that's where you want to be. So the first way is, of course, in ETFs. And the ETF way, why would you want to do that? Well, the ETFs give you diversity. Let's be frank, they're easy. They're easy. I just buy it. I'm getting the whole, universe of small caps in the value area. And I don't have to think about anything. It does reduce volatility and risk to some extent because I'm getting this bigger universe. Some of these ETFs hold 200 to 250 names. Some are a little bit less. But obviously, if one of those small cap stocks blows up on an earnings report or goes bankrupt or whatnot, it's not going to damage you as much as if you just owned that one individual company. So ETFs are a good way to go. And I'm going to give you a couple of the top ones that I like in that area. But you can also buy individual stocks. And of course, here at Zacks, we make it our business to try to find you the best quality names in all segments. And of course, that includes these small cap value stocks. So you can use the Zacks rank to narrow it down and find good quality names, because I'm going to give you 3 of those that I use the rank on to find for this podcast, and there's many more out there. Now, why would you also want to buy stocks? Well, you can outperform the indexes if you're picking right and you get in, one of the big winners. You can do better than what the ETFs are doing. And really, I like to buy stocks, the individual names, because it's just more fun. It's more fun to see what the companies are doing, to know that you own that company. You might get a dividend. Yes, even with a small cap, you might get that dividend, and that's fun too. Although the ETFs also will give you a little bit dividend as well. So let's jump right into the ETFs first. So I had to talk to Eric Dutram, our ETF strategist, about some of these. A couple years ago, he actually led me to the first ETF I'm going to tell you about, which is the Vanguard Small Cap Value ETF. That ticker is VBR. I own this in my personal portfolio. It's been around about 12 years, so it's one of the bigger ones. It has $20 billion in net assets, so a lot of people hold this one. It holds a lot more stocks than the other name I'm going to give you. So each one is making up just basically about 0.5% of this portfolio. So you're basically buying, like I said, the entire index with this ETF, and it's going to move when the small caps go up. This one will go up. It is the small cap value. Vanguard also has small cap growth, but there's probably quite a bit of overlap there just because there's over 200 names in this portfolio. So you will get some growth with this, which I don't mind. It has a yield of 2.3% right now, which is kind of remarkable for small cap companies. Yes, a lot of them do pay dividends. So I like this Vanguard one. Like I said, I own it in my own personal portfolio. So that's an option. And then Eric was telling me about these Guggenheim ETFs, which are considered pure value ETFs, and that's in its name. And that ticker is RZV. Z as in zoo, V as in Victor. Those are just the value plays. So they actually strip out anything that's the growth or the ones that overlap, like the Vanguard one has overlap. So you get a lot fewer companies, 100 to 150. And some of the shares actually make up a little bit bigger portion of the portfolio than others, but it's not overwhelming. The biggest holding is 2.7% of the portfolio. And this has a lot of names you might notice. I looked at the top 10 on this one, and they had SkyWest, which is a small airline, Atwood Oceanics, Easy Corp, which is, these are all like financials. So I like this area, and this one is a lot smaller. It only has 170 million in assets, and it yields less. It's yielding only 0.7%, but you do get something there. And this one's based on the small cap 600. So that's also a good way to get into the overall value area. But if you want to do the stocks, I also have those because, as I said, they're more intriguing and more fun. So let's start off with AGCO brands. And it's not AGCO, AGCO, because I do get them confused, actually. It's AGCO, ACCO, and the ticker is also ACCO. These guys do the office products. I think everybody recognizes this name, even if you don't really know what it is. They actually are global. This is a global company, market cap of about $1 billion. But they're seeing really strong back to school sell-in. They raised full year's guidance in their last earnings report. Sales were up 4%, and the analysts like them because they have strong free cash flow. They're trading with a forward PE of only 12, so that's the value, and they have a price to sales under 1 at just 0.7. These guys do not actually pay a dividend, but this is an interesting play and something to check out. The second stock is Columbus McKinnon. Their ticker is CMCO, and they are a maker of material handling products. So I actually had to go in and look that up. Like, what does that mean? These descriptions of these companies, you can never figure it out till you go to their website, and then you're like, oh, why didn't they just say that? So they make electric chains, electric wire rope, crane components, and hoists. That makes more sense to me. Sales were up 9.4% in their first quarter for fiscal 2017 report, which they just made. And they said their end markets appear to be stabilizing, even though they're still challenging, but that the North American market may have bottomed as oil prices and rig counts have stabilized. And then they talked a little bit about Brexit because they too are an international company, and they said it's caused some uncertainty in Europe, but it's not all doom and gloom over there. So these guys, market cap of 340 million, they're small. So that's small, but their PE is 11.7 and their price to sales ratio is just 0.6. And they actually do pay a dividend, almost 1%. So 0.9%, almost 1%. That's an interesting play here if you're looking for kind of a global manufacturer. They've been around since 1875, so they got a long history. Our third pick today is Faro Corporation, and they're in Cleveland, and they have a market cap of 1.1 billion, so a little bit bigger here. They do coatings and color solutions in glass and particle engineering. They operate in 26 countries. I wasn't noticing this trend, but all three of these are real global small caps, which is kind of unusual, actually, now that I'm thinking about it. Usually you're getting small caps, you're getting much more domestic because they're smaller. They haven't expanded outside the United States, but all three of these small caps are definitely global. So that's interesting play. These guys, Faro, also raised 2016 guidance, and they said some challenges do remain in Indonesia, Brazil, Argentina, and Turkey, but sales trends are improving overall, and especially in performance coatings. They have a PE of 12, little over 12, and their price to sales is right at 1. They don't pay a dividend. So the only guys who pay a dividend here is Columbus McKinnon. But you're not really buying the small caps for the dividend. You're buying for, the growth and these other things. But you're also getting some really good value plays here. So if you want the stocks, look around. There are a lot of small caps are reporting right now. So a lot of the earnings reports are going to be changing with their earnings estimates. I think we're going to see a lot of good things developing, especially in the manufacturing side. So interestingly enough, 2 out of 3 of these are basically manufacturing related. So that's an area to keep an eye on. But, if you're looking for an area that you have to be in, small cap value is it. Let me recap what the stocks are again. They're ACCO brands, ticker ACCO, Columbus McKinnon, CMCO, Faro, which is FOE. Not sure I even said that ticker, but it's FOE. And then, you can always get in on just buying the indexes. There's nothing wrong with that. You're not being lame by buying the indexes. It's a good way to play it, especially small caps. You can do the Vanguard Small Cap Value ETF, which is VBR, or the Guggenheim ETF. This is the pure value play ETF at RZV. So be sure to check out the small caps. I'm going to be talking a lot more about them in future podcast episodes because small cap value is the place to be. It's kind of known out there, but a lot of people forget about it, and you really shouldn't. So check out small cap value, and I'll see you next week with some more value plays.
Listeners of today's program might have an interest in value stocks similar to those Tracy shared today. If you'd like access to her Value Investor Portfolio service, which includes real-time buys and sells, market insights and commentary, visit www.zacks.com/valueinvestor or call toll-free 1-888-775-8348 between 10 a.m. and 6 p.m. Monday through Friday. Outside the U.S., call 1-312-265-9309. Again, that's www.zacks.com/valueinvestor or toll-free 1-888-775-8348. Outside the U.S., 1-312-265-9309.